Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines. Yes Bank will seek an extension for Rana Kapoor to continue as MD and CEO till September 2019. Indian oil imports from Iran may drop to zero in November with no orders being placed so far by Indian companies. A 5-judge constitution bench will deliver its verdict on the validity of Aadhaar today. And Afghanistan pulls off a tie with India in the Asia Cup. And I know as an Indian cricket sports fan, you would be disappointed that India didn't make it through, but boy, it seemed to be a very interesting match. I didn't manage to see it, but just looking at the reports and the comments that have been there on social media, it was probably an interesting match. Maybe the highlights might be exciting too. Anyways, let's take stock of the markets. The global news roundup, of course. China, in and around post-market hours, our market hours yesterday or otherwise, said that the US needs to show sincerity for trade talks to continue, and they are willing to embrace talks, but the US can't keep a knife on its throat. Those were, I think, quote-unquote, the words that was used by the Chinese troop. And the US markets, of course, pulled down after those tough commentary from Trump when he was addressing the UN. Frankly, if you look at the Dow intraday, while it is not evident here, but the Dow intraday would have shown you that the markets were trading reasonably well for most part of the trading day before pulling back. So about 0.25% off for Dow. Nothing too dramatic really, but flattish kind of a move at close. The Asian markets, mixed bag. Remember, a clutch of Asian markets were shut yesterday, starting off today. There's some green on the screen for some of these Asian bourses. So a mixed bag start. And India, which has been having its own problems, but post the commentary that came in from the LIC chairman yesterday, really shot up in trade, and the SGX Nifty indicates some more upside. Now, you know, all through the last few days, if you've seen the shows, both Indian Open and Countdown and some of the others, I think the FN show in particular, we've been talking about this as well. One, what happened yesterday was that the LIC chairman commentary about they supporting ILFS at any cost, as also media reports about how commercial paper raised by some of the NBFCs brought back the confidence. So that was one. The September series, if you just look at the open interest positions, the September series, Nifty and the Bank Nifty OI, there was some pullback there, some short positions being covered too. And the Max OI still stands continuously at about the 11,000 put option. The OI distribution chart would show you that that number has stayed tall. This is, of course, the open interest change, and that also indicated activity around the 11,000 mark. But the OI distribution would show you that the 11,000 put option stays very tall. Now, despite scares in a couple of preceding sessions, which is Monday in particular, but even in Friday's session, despite scares of these levels being taken out, I think the OI stood tall. Most traders who've written these options believe that the markets would close, or the series at least, would close above those levels. So that's a key pivot. And for now, it doesn't look like that will be under a bit of a scare. So those writers have turned out to be true. Yesterday, there was some deep selling by FIIs, by the way, 1,200 crores worth of net selling, but domestic institutional investors continue to pile in money. Day before yesterday, about 1,500 crores. Yesterday, about 2,300 odd crores, provisional numbers at that. But still, the DIs continue to pump in money. However, the disconcerting part is that the FI flows, which had almost come to even Stevens in the month of August, have now started to dwindle a bit as well. Some large numbers on a number of days in the month of September. So the going seems to be promising. We'll have a start which is in the green. Whether we continue from there off or no remains to be seen. I think the fact that LIC chairman came in and mentioned this just soothes the nerves of a lot of traders. What are the stocks to watch though in the session today? There are a number of them, by the way, and a clutch of brokerage notes as well, but I've chosen 3 which I think would definitely show a reaction today. One of them could be Yes Bank. The board has sought extension of Rana Kapoor's tenure till September 30th. Now we'll talk in detail about this. Almost everybody seems to believe that this may also not go through, but this might continue to have a small overhang on Yes Bank as well. Let's see, the board has decided to approach RBI. You, of course, heard a number of members yesterday on the live feed as well. We'll talk about some of this in today's session as well on First Word. But this is one piece of news for Yes Bank for all those who've missed it. And let's wait and watch what happens to the stock. A couple of other names and interesting ones. Since the market is also looking like starting off in the green, these stocks might react positively. One of them is BEL, of course. And in an analyst meet, the management has gone out and said that the margin impact on new defense will be less than than 100 basis points. Now, remember, because of this new defense circular, a lot of analysts had priced in an impact of at least 300 basis points on the PBT. The management saying that because this is prospective and not retrospective, and also prospective from, I think, 2020 or 2021, on the existing order book, zero impact, and therefore cumulatively about 100 basis points impact. That's it. And that should actually be a positive. I would reckon BEL could start off slightly positively today. Last but not the least is Minda Corp. Now, most people would wonder as to why is it that an investment into a two-wheeler facility in Maharashtra is that important. The stock has done quite a bit. It's also catering to a lot of different segments. A lot of brokerages believe that this might give a ready market to Minda Industries, and they've got the confidence of their clients as well. So some upticks in EPS estimates could happen, if not for FY19, for FY20. Likelihood that this stock too might react slightly positively in the session today. And then keep an eye out on, of course, all of those NBFCs and banks. A clutch of them moved up in late trade yesterday. We could see some action in today's session as well. However, what's lined up on First Word today? We discuss Yes Bank's appeal for a smoother leadership transition. Vishwanath Nair will join us with the board's plan to extend Rana Kapoor's term. The recent correction in Indian equities have made investors wary of the valuations that they've been paying to expensive stocks, even if these are blue chip favorites. I'll talk a bit about that. Be prepared to pay more for two-wheelers. Yash Upadhyay will tell us just how steep the price rises may be over the course of the next 12 to 18 months. And then, arguably the most important event of the day, Arpan Chaturvedi will sum up the operative portions of the Aadhaar judgment that one must watch out for in the session today. However, well, the biggest news of the morning, or maybe late last night, is Yes Bank. They want an extension for Rana Kapoor to pass on the baton to someone. The private sector lender, which held a board meeting in yesterday's session, has said that they will seek an extension till September 2019 to get in a new CEO and managing director. Vishwanath Nair joins us now to tell us the reasons cited by the bank for seeking such an extension, and what do his conversations with some of the experts come in, because Vishy, I was listening to some of the chats that you had yesterday as well. But first, lay it out for us. What is Yes Bank's argument, and then what have experts told you about this?
Well, so last night's statement stated that the bank is going to approach the RBI for an extension because it wants the process of moving to a new CEO being non-disruptive, sort of a smooth transition. So for that, they're approaching the RBI with a request that Rana Kapoor's term be extended from 31st January to April 30 at least. That's the minimum they're asking. They're saying that this is so that they can finalize the audited financial results. And if the RBI permits, then till September 30, so that the AGM formalities can be taken care of. Now, the experts that we spoke to yesterday were very categorically pointing out that these reasons don't seem to hold water, because it's not crucial to have a CEO for either of these functions. You are a professionally run bank and a professional board. You have senior officials at the bank who have worked on all of these factors. Plus, you just a few weeks ago, you had ICICI Bank conduct an AGM without a CEO. So it's not something that's completely new to the market. But in either case, this is what the board seems to suggest. Last night, we also had a conversation with R. Chandrasekhar, who's a board member and a former NASSCOM person. What he pointed out was that it is essential that what the board felt was that this one-year timeline is essential to find this new CEO, to ensure that this person is free enough to come and join Yes Bank, and that transition between Rana Kapoor and whoever this new person is can be something of a smooth transition. He said, and this is what the board has decided, that they're going to appoint a search and selection committee, which will comprise of 3 members from the remuneration and nomination committee of the board. They will also have 2 external experts who will help the bank find this new CEO. What they've also done is that they've elevated 2 senior professionals at Yes Bank, Pralay Mondal as well as Rajat Monga, who are both senior group presidents now. They're elevating them to executive director position. And they suggest, what the board suggests is that both of these people will be part of a long-term succession plan. Now, yesterday when we spoke to Jain Gupta, he said that if you're going to put them in a long-term succession plan, it's believable that they won't be part of the short-term plan, which is to find the CEO in the next few months. But of course, R. Chandrasekhar said that it's not fair to say that, because nobody's precluded or included just because of a position, a certain position in the bank. The committee will decide whether certain people should be eligible or not.
And the caveat we see out here would be that eventually the RBI will decide whether or not whatever the committee decides, they will accept that or no.
All of these aspects, apart from the search and selection committee, which the board had to do anyway, all of the other caveat things come with that caveat that the RBI has to approve Rana Kapoor's extended term. The RBI has to approve the elevation of both these professionals. The RBI also has to approve the new CEO. So there are a bunch of things that the RBI will have to decide in the next few months. What Jain Gupta pointed out, and he's a former SEBI person, so somebody with that authority, that regulatory authority, what he's saying is that it's unlikely that the RBI is going to give Rana Kapoor and Yes Bank that extended time that they're seeking, because the RBI has made it clear that they want Rana Kapoor to leave after the 31st of January. So he doesn't understand at least why the board would approach the RBI with now a new timeline for him to continue. But in any case, this is something that Axis Bank, we saw at Axis Bank play out earlier this year. Shekhar Sharma's term was supposed to end in June 2018. And that got pushed to December 2018 because they said that they needed some time to find the new CEO. They found it way before that deadline. And Amitabh Chaudhary will take over on the 1st of January. So, it's a little difficult to believe that a bank will not have enough time to find the new CEO, even though the RBI has given it a 4-month period to do so. So that's essentially the essence of the discussion that happened yesterday. But interesting days ahead for Yes Bank for sure.
For sure. Vishy, just one quick follow-up. There are a couple of notes which are saying that, and I don't know if any of those guests that you spoke to dwelled upon this a bit, that this might require the approval of Mrs. Madhu Kapoor, the second largest promoter shareholder, as well as per the High Court verdict. Did anybody dwell on that a bit?
So the point that they were making is that their voice has not been heard so far. We understand through our sources that there has been a letter that was sent by the Madhu Kapoor family to the Yes Bank board saying that whatever process you follow to find the new CEO, that has to be independent, and Rana Kapoor should not be allowed to influence that process in any form. But important to note that R. Chandrasekhar yesterday in his conversation mentioned that Rana Kapoor was present during the board meeting, during some parts of the board meeting. He didn't specify where he went out, but suffices to say that it's a little difficult to have the CEO around when you're talking about succession planning. So, important questions. But from what we understand through our sources is that the Madhu Kapoor family does not have a problem with an extension as long as there is a clear path that he will move out of the bank and that somebody else will come in and take over the CEO position.
Interesting. But maybe the RBI may not be so kind as well. Let's wait and watch. Vishy, thanks a lot for putting that into perspective. And, well, I think a bunch of these stories would be there on the website. Any which ways, for all of you who want some extra information, please log on to bloombergquint.com and read up on that. I must tell you, just before I move on to the next piece, that brokerages now, after this cuts and after this outcome of the board meeting, have been divergent. So IDFC has an underperform rating with a target price of 230 on Yes Bank. Macquarie believes that some of this is overdone, and they believe that Yes Bank could outperform their target price about 425. Bullish, I might add. But yeah, so brokerage is very divergent on Yes Bank. But, well, Yes Bank may not have been the bluest of the blue chips, but the recent sell-off has brought with it maybe a much-needed correction in the valuations of some of the poster boys of the Indian equity markets. Now, what I'm trying to do out here is just bring out how the pullback has been on some of the top valued names since the start of the July series. The difference in the nature of the market is that it has not seen a correction in the underperforming names only, but also a correction in a bunch of blue chip names. So picture this, choose 3 or 4 large top of the line companies which are leaders in their space and look at the pullback that has happened in those names. Maruti, as of yesterday's cut, is down 18% from its peak. HUL, 8% from its peak. Titan, 20% from its peak. Bajaj Finance, 23% from its peak. And if you just look at what's happened, there is no earnings downgrade out here. There is no other correction, but simply a valuation or a P multiple pullback or in Bajaj Finance's case, a price to book pullback that has happened. This is Maruti's PE trend. And as you can see, that is a bit of a mean reversion for Maruti PE multiples from the levels that it was at to the level that it is right now. So significantly down, and it was, of course, quite high compared to what it is right now. Moving on to HUL, I mean, the stock, depending on what earnings estimates you had, but on a ballpark earnings estimates had hit P multiples of almost 60. Look at this, what's happened to HUL as well as Titan. The white line is HUL and the P multiples have corrected from northwards of 55 or 56 times to almost 50 times now 1 year forward. In certain cases, in certain analyst estimates, the P multiples had hit a level of 60. Now, these are very steep valuations compared to what the averages for HUL are. The 5-year average for HUL is about 46 times, 45 times. It had hit 60 times 1 year forward earnings. There's been a bit of a course correction. Nothing to say this can't deepen further, but it's come down to about 50 odd levels now. Titan, well, the market has been a lot more skeptical about the P multiples that the stock enjoyed. So after hitting 40 odd times or even northwards of that, Titan 2, the P multiples have come off and come off quite a bit. Bajaj Finance, price to book levels of 9 times at 2,985, which was the level at which Bajaj Finance had gone up to. The price to book, and again, depending on what estimates you took for the adjusted book value, had gone up to almost 9.5 times. That has scaled down to about 7.5 times as of yesterday's close. So there's some bit of mean reversion that is happening in the multiples for some of these large names. And it's not restricted just to the Nifty names, by the way. Even at the mid-cap end of the market or the non-Nifty names, a clutch of these darlings have come off and come off quite rapidly. Escorts, the poster boy of the tractor space. People spoke about investment in Escorts versus an M&M to that extent. That stock is down 35%. Godrej Properties, real estate company that could do no wrong, is down 35% from its highs. VIP Industries, massive move. The management saying that they've seen the best times for the business since 1990. That stock is down 22% rather. MRF is down about 20% from the highs as well. Stocks like Symphony, Delta Corp, Motherson Sumi, all of them leaders in their individual pockets, have corrected at least 20%. In the case of Symphony, about 45%. In the case of Delta Corp, about 30% from those highs. So the correction has been steep, and the correction is making sure that the poster boys of the large, mid and the small cap space are now getting punished as well. Some bit of valuation correction coming in. Keep in mind, say for Bajaj Finance, I'm not highlighting any of the other NBFCs because those have reasons for the fall as well. There are business dynamics that have changed. But for a lot of others, it's not just a change of business dynamics, but purely a P multiple contraction that's led to these stocks coming off. Maybe that's working in the auto space as well, because fierce competition has kept two-wheeler prices in check on the stocks and on the two-wheelers as well, but especially at the entry level, and buyers have made the most of it. However, this may not continue further. The insurance regulator has mandated a 5-year third-party insurance cover from September, and new safety and emission norms will only add on to the prices. Yash Upadhyay is here to give us an estimate of just how much prices could rise by in the not-so-distant future. Yash, good morning. Now, I presume the timelines that we're talking about are over the next 12 to 18 odd months?
Yes, exactly. Good morning, Neeraj, first of all. So we'll start with what's known out of the 3 reasons that are likely to push up prices. So first off is the insurance bit. Now, under the Motor Vehicles Act, it is mandatory for a new buyer to have a third-party insurance cover, but presently, or at least until August 31st, it was offered for a period of 1 year. But with the Supreme Court ruling now coming into effect from the start of this month, the new buyers for any two-wheeler will have to make a higher upfront payment, as there would be only a multi-year insurance cover which would be offered from now on, and for scooters and motorcycles that period stands at 5 years for any new purchase as well as renewal. Now, while the ex-showroom price of your favorite motorcycle or scooter will continue to remain the same, what it does is that it increases the insurance bit of the on-road price. And as you can see on the chart over here, for vehicles of a different engine capacity, so for example with less than 75cc capacity engine, so that is for the mopeds, the insurance cost would rise by as much as 2.4 times. For something of 75 to 150cc, which is broadly the entry level segment, the insurance cost would rise by as much as 4.5 times, and for the premium end bikes, the insurance cost would go up by more than 5.5 times. So that is a big hit, and would almost translate into a 10 to 15% increase in the on-road cost for the two-wheeler. So that's a big hit there. Also, earlier in the year, the government announced that for all new variants of existing models, the two-wheeler maker would have to come with ABS or CBS installed with them. Now what this does is that it increases the prices again. So our interactions with our auto dealers tell us that for bikes or scooters having an engine capacity of 125cc and below, that price would stand to increase by about 2,000 to 3,000 rupees. So what the ruling says basically is that for any scooter or motorcycle with an engine capacity of less than 125cc, that will have to come with CBS installed in it, which is the combined braking system for the front and rear wheel, as well as for bikes with the higher engine capacity of more than 125cc, they would have to come with ABS installed. So if you are in the market for a new bike and there has been a new variant or a refresh which has been announced just a couple of months back, there are high chances that you won't get the standard variant of it and you might end up paying more, because what this does is that for something like a 125 to 150cc bike, the cost goes up by about 5,000 to 7,000 rupees, and for something like a Royal Enfield or the higher end bike, that price shoots up by more than 10,000 rupees as well. As we've seen in some examples, for example, the TVS Apache 200R, the standard model costs about 91,000 rupees on road in Mumbai, and that price with ABS goes up to 1,04,000 rupees. So that's almost a 14,000 rupees jump there. So it's a big hit there. And lastly, the government earlier in the year also announced the shift in the BS6 norms. So they've skipped an entire generation and moved from BS4 to BS6. Now what it means is the key change for two-wheelers would be the change in the fuel delivery system. So at present the two-wheelers come with carburetors, and that would change to fuel injection systems, and what that would mean is that it would push up prices again further by as much as 10,000 rupees. Now this is at present, the prices are likely to go up by 10,000 rupees, but as it becomes more mainstream and with economies of scale coming into play, that price could come down to about 5,000 to 7,000 rupees according to a report by Jefferies. But all in all, with all of these factors put together, your two-wheeler purchase could get expensive by at least 10,000 to 15,000 rupees going forward, at least in the next 18 to 20 months.
Well, interesting. So anybody who's wanting to buy a two-wheeler over the next 12 months, for a lot of reasons, actually not just one, you will have to shell out a lot more for your purchase. So thanks a lot for putting that into perspective, Yash. That's very interesting analysis of what will happen in the two-wheeler space, two-wheeler pricing essentially. Last piece on First Word today, and that's arguably the most important judgment of the day, possibly judgment of the day. A 5-judge constitution bench will deliver its verdict on the constitutional validity of Aadhaar in Supreme Court today. The judgment will have far-reaching consequences on the life of all Indian citizens. Arpan Chaturvedi joins us from our studios in Delhi to tell us about the most crucial portions of the judgment that we need to look out for. Arpan, very good morning, and by far the most important judgment today. What should one watch out for?
That's right, Neeraj. It's one of the most important cases, and that can be judged from the fact that as far as the hearing in the Aadhaar case is concerned, this was the second longest hearing ever in the history of the Supreme Court. After hearing the case for 38 days, the Supreme Court had reserved the judgment in May, and now the judgment would be pronounced in just a couple of hours. What we know as of now about the judgment is that there are going to be 3 separate opinions. One would be by Justice Chandrachud, the other one by Justice Sikri, and lastly by Justice Ashok Bhushan. Now, as far as the judgment is concerned, there are 3 things three key important things that need to be watched out for. One is what will be the court's stance as far as the biometrics or the data collected before 2016 is concerned, because that is when the Aadhaar Act was introduced, and the petitioner's argument is that the data collected before that was without the backing of a law and hence was illegally collected, and that's what they have challenged. The second point is as far as the Aadhaar Act 2016 is concerned, the petitioners has challenged the manner in which it was passed in the parliament. The petitioner's argument is that that does not qualify as a money bill, and it will also be interesting to see not just from the perspective of the Aadhaar case, but on a larger constitutional ground as to what is how does the court scrutinize this aspect of whether a bill qualifies as a money bill or not. Lastly, of course, we go to the Aadhaar Act, and in that there are 2 key provisions to watch out for. The first one is that what will be the court's stance as far as the need for Aadhaar for providing government services, subsidies, which is in the section 7 of the Act. What stance does the court take on that? And of course, after that is that as far as section 57 is concerned, where they deal with the need for Aadhaar for providing private services, a requirement of Aadhaar by corporate persons, what exactly will be the court's stance, because the petitioners have challenged that as well. So these are some of the key points that we can look forward from the judgment. It's likely to come out any time after 10:30, a little after 10:30, when the 5-judge constitution bench will pronounce its judgment in the Aadhaar case today.
So busy time post 10:30, and trust me, a lot of this coverage on Aadhaar and an extended one will be out here. Arpan, thanks for putting all of this into perspective. It's important to know what this means for the lives of you and me and every ordinary citizen, and what the impact of any kind of judgment on either direction could be. But that's all that we have on First Work today. We'll watch out for this and lots more. However, from a market's perspective, we discuss all the developments in the banking sector, from Yes Bank's leadership challenges to the NPA cleanup at PSU Bank. Saswata Guha of Fitch Ratings would be joining us to talk about that. We talk about the rising competition in the liquor space with Shekhar Swarup of Globus Spirits, who will also throw light on the recent ethanol ruling and what it means for companies such as Globus Spirits. But after this break, a full tilt towards the day's trade.
Good news, got a promotion and a damn good raise.
Congrats बेटा.
वाह रेज अब तो इंश्योरेंस पॉलिसी ले ले.
कौन सी कंपनी से लूं?
चूज वही जिस पर हो पूरा भरोसा.
That's good. But आज की generation wants everything online. Easy premium payment options, loan facilities और wide range of products.
पापा दीदी, I will decide. Just send your links now. तुम दोनों भी ना. Same choice. LIC.
LIC trending with times. 62 सालों से हर जनरेशन की पसंद.
When I started juicing to bounce back from a serious injury, I had no idea that it would turn into a passion, that would turn into a brand that provides healthy choices to millions of consumers. Today, my brand is a household name. I am Anuj Rakhian, and my story is a clean and a flavorful one. I'm the raw pressery guy, and I'm here to tell you my story only on Aegon's of Business.
Aegon's of Business never stop. Only on Bloomberg Quint.
Hi, I'm Jatin Khimani. I'll be at Investors Carnival this year talking about the art of selling stocks. Watch me on Bloomberg Quint.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Welcome back. You're watching Indian Open. Let's see how the Asian markets are faring, and we are seeing some strength come back into the Asian indices. The Nikkei is trading marginally in the green, but we have seen strength in the Shanghai, which is advanced by as much as 1%, and Hang Seng also up by just as much. So, well, green throughout in the Asian indices, and that means we've had a possible and positive implication on the SGX Nifty, which is, increase its advances. Now it's up 65 points at this point in time at around 11,144. But 2 sessions left for expiry. What are the derivatives markets telling us, and what can we expect as we move into that? We have Darshan Mehta joining us to give us an idea. Darshan, good morning.
Good morning, Agam, and I think what the rally that started in trade yesterday afternoon probably is continuing. The SGX Nifty is indicating significant amount of upside that is seen. What we're seeing as far as the Nifty is concerned, the rollovers are at almost 29% this time around, and they seem to be moving on the higher side. The Nifty Bank rollovers are close to 27% at this point of time. Now, if you're looking at where positions are taken at this point of time, apart from it, the wicks have managed to cool off, given the fact that the markets rallied over 100 points in trade yesterday. Today, another 60-point up move that will come in. Now, what we're seeing is that yesterday, at higher levels, positions were getting squared both on the call side and the put side, given the fact that, the market is on the verge of expiry. That will happen tomorrow. But put writers became aggressive at 11,000 levels. So they started writing in more, because that That's the support level that they saw. And call writers were forced to shed positions in open interest given the fact that the market did rally. One thing is clear, that the market is seeing 11,000 as a big support. We've seen the markets break 11,000 multiple times in trade over the past 2 days, but has always managed to rebound in trade. So probably what will happen with this 60-point uptick, there will be more short covering that will come in on the 11,000, 11,100, 11,200 level. There could be short covering, and put writers will become much more aggressive. As far as individual stocks are concerned and the PCR ratio is concerned, given the fact that the market did manage to rally, the Nifty PCR, the Bank Nifty PCR also managed to move up on the higher side. As far as the stocks in the F&O band is concerned, Dewan Housing, after a big drop of 23%, comes in the F&O band, and what exits the F&O band is Adani Enterprises. A couple of stocks that I want to point out, first of all, is Motherson Sumi. Did manage to rally 3.8% after a big drop that we saw last time around. Rollovers are decent at 37%. Yes Bank fell in almost 3% in trade yesterday. Probably will nothing much coming out in the session yesterday. It will be difficult to gauge how the counter will react, but the rollovers are close to 42%. A couple of more stocks. Kotak Bank yesterday ended at the highest point of the day. It was up 3%. Rollovers are decent, so there seems to be traction coming back as far as some of the private banks are concerned. So these are the three stocks that I'll be watching out today.
Well, thanks a lot for that, Darshan. So important, interesting that even on the F&O side, a lot of financial names were right up there. Let's talk about all of that and more with Abhimanyu Sofat. He's Vice President for Research at IIFL, joins us right now on the show. Abhimanyu, good morning. Neeraj here. Thanks so much for joining in. Pleasure having you. Before we get to the crux of the conversation, just a small query about this trigger provided maybe by the LIC chairman's comments yesterday, or the fact that a couple of NBFCs managed to raise some money via commercial papers. Do you reckon that was the reason for the small uptick that we saw? And is that good enough to reassure the markets that a possible contagion from ILFS might not happen, because LIC said that they'll do everything to ensure that ILFS doesn't fail?
Absolutely. So if you look at the movement of stocks like Indiabulls Housing Finance, when in market there was some information that they have been able to raise some money at significantly lower amount of rates, we see the pullback in case of Indiabulls Housing. I think so in case of DHFL as well, if we do see that kind of new flow on a consistent basis, then there may be some kind of a pullback in the stock. Overall, I think so the ILFS issue would require a lot of thinking, because if you see for last 2 weeks, what's been happening is when the first default happened, all the AMCs were talking about that there'll be capital raising soon and there is not likely to be any issue. But now we have seen multiple defaults happening at ILFS. So going forward, we've also seen that SIDBI going to NCLT and the process happening that side. So it's going to be a long-term process where who's going to take what kind of assets, because it's quite complex. The number of assets that they have a lot of JVs, they have a lot of different kind of investments. So somebody ascribing the right value to a company like ILFS is going to be quite a challenging thing. Having said that, I'm sure we all think that LIC is always there to support at the expense of the policy holder, and end of it, acquire whatever is a systematic risk that we have. So from that perspective, I think so now how we'll be able to provide liquidity back to the system, that's the key thing. The conundrum that one is clearly seeing is that on one side you are looking at OMOs, but at the same side, with the inflation being high and currency depreciating, RBI is likely to increase rates. So I think so it's kind of a precarious situation that we are going through at this particular juncture.
Okay, so Abhimanyu, why don't you tell us about how you're dealing with the NBFC sector right now? Let's talk about Dewan Housing Finance specifically. What would you do with this one? How would you go about, what's your approach here?
So our approach to whoever has been asking us from last Friday, in fact we came out with a note on Friday evening itself, has been please don't touch these NBFCs at this particular point of time, because we believe that the liquidity risk which most of these companies are grappling with. We are still not certain, so better to buy at a higher rate rather than try to bottom fish with these companies. See, if you look at the business model of the NBFCs, it's basically about lending to companies, to individuals or other entities at a longer duration, but a continuous refinancing of shorter duration paper. So I think so once you have an issue with liquidity in the system, and mind you that we've seen a significant uptick in terms of the borrowing by NBFCs in the overall mix of the funding which is happening in the overall system. I think so clearly there is a challenge in terms of ability of a company like DHFL to raise capital at lower rates. So until unless there are people who are very confident about putting in money. In terms of the secondary market transaction that we have witnessed in case of DHFL of its bonds, the volumes are pretty low to make a case that they are out of the woods. So though the yield has not spiked out too much after the first initial yield increased to around 14-15%. Now the yield is stable, but still I think so the volumes are still not there for people to be assured that things are still good. So it's more of a wait and watch approach for such NBFCs. We would rather prefer people to go to a private sector bank, something like an ICICI bank, as a better bet within the BFSI space if one has to play the sector. And for rest of the sector, more or less, we right now would be in a standby mode.
But Abhimanyu, would your approach be the same when it comes to companies which are perceived to be safer, such as HDFC Limited and Bajaj Finance?
So see, the problem in case of Bajaj Finance has been that when you have this kind of a significant increase in rates which are sudden, it takes time for such companies to increase rates. For example, you have a consumer loan that you have given for a refrigerator for a 6 months period, and you have built in a certain amount of NIM. Now, since it's a fixed rate that you will be charging the customer, there will be some kind of pressure for you in terms of NIM, and it would take probably 4-5 months for you before you start repricing that particular loan to maintain your margins. So I think so from that perspective, market was a little bit worried about Bajaj Finance. The stock has already corrected from a level of 2995, I think so, to currently below 2300. So what we have been advising our clients have been to have a staggered approach with such stocks. So they started buying at around 2400 level, now around 2200 level, and then around 2000 level. We would be telling them to increase their exposure to companies like Bajaj Finance, because from a structural perspective, I think so the story as such in Bajaj Finance still looks to be robust, though the earnings growth may be tad lower considering the cost of funding it has increased for them, and their ability to pass it on to the customer for short duration perspective may be a bit limited relative to what it was earlier.
Interesting. Abhimanyu, what's the view on Yes Bank? After all that's happened, you would have seen the board meet outcome yesterday as well, inconclusive, because the view is divided whether RBI will approve some of these changes or all of them or none of them. But how do you approach Yes Bank as an investor now?
So I think so in case of Yes Bank, the outcome of the board meeting clearly is not giving enough confidence that we are out of the wood in terms of uncertainty about Mr. Kapoor moving out, because there is an additional angle of Madhu Kapoor, the kind of fight they had couple of years back with Shagun Gogoi, being put as a director of Yes, and at that particular point, if I'm not wrong, the court has clearly said that both parties need to say yes for any elevation to the board. And in this particular case, you have two insiders, and one guy being the Oswal CFO, being elevated. So I'm not sure whether the other party is going to approve it. In addition to, the issues which RBI has been having with the management of Yes Bank. So from that perspective, I think so. If they would have come out with some kind of an external name, that would have really helped going forward in terms of removing uncertainty. This will not remove uncertainty. In terms of valuation, I think so the stock is quite cheap. So even if there is some kind of impact that people are talking about that might happen in terms of aggressive lending by the bank, because clearly the growth rate have been quite stupendous over the last couple of years. I think so still valuation wise it's a very good franchise which is there with significant traction in CASA coming over last couple of years. So it depends on the perspective. If my perspective is more than 2 years, probably I'll buy at this particular rate. But yesterday's board meeting conclusion was not something that is very great for the investors.
Okay, hold that thought, Abhimanyu. Let's take a look at some of those stocks which are going to be in focus in today's day of trade. We have a company which held an analyst meet, and we also have a few brokerage calls. And for that, we have a research team joining us right now. Good morning, guys. Thank you for joining us. Shraddha, as usual, let's start off with the stocks and news.
So, Agam, 5 stocks that I want to highlight. One is Minda Industries, where the board has approved setting up a new manufacturing plant for two-wheeler alloy wheels in Maharashtra. The capex outlay for this will be 500 crores, and the production is expected to start from November 2019. Glenmark Pharma will consider buyback of foreign currency debt worth $200 million on 28th of September. Blue Dart has also said they will be investing 200 crores for expansion, and that will be mainly in tier 2, 3 and 4 cities, and they aim to cover 19,000 pin codes by December itself. Adani Green Energy will be in focus as well. They've won a tender to set up a 300 megawatt wind energy project, which is expected to be commissioned by Q2 FY21, that is 2 years from now. The tender was for 2.76 per kilowatt hour for a 25-year period. And finally, ICICI Lombard General Insurance will be in focus. PE fund Tamarind Capital has completely exited the company by selling 1.59% stake in a bulk deal yesterday.
All right, and with stocks and news, we also had Bharat Electronics, which held an analyst meet. Dasha?
Yeah, so what they did was they invested uploaded their investor presentation on the exchanges, and they also had an analyst presentation with the analyst. So the key takeaway, there were a couple of them. The first point was, now remember, the stock has cracked almost 30% when the new Ministry of Defence circular came out in terms of, restricting the PBT margins from 12.5% to 7.5%. For the traded portion of the contract. Now what the management has given is clarity. They believe that the impact of this on the PBT will be less than 100 basis points, anywhere between 50 to 100 basis points as per their calculation. The street had a fear that it could be in excess of 300 basis points. So that's the first positive that's come in. Apart from it, they're saying that the order that has come in will now actually help them in terms of reduce the frequent delays in awarding the contract. So they're saying that they are positive, but working capital stress may still stay despite the fact that cash on books has gone up. So that's the third key takeaway that's come in. But overall, I think the management was pretty confident in terms of what they expect as far as this order is concerned.
All right, well, there you have it. But I also want to talk about Titan, because we had Morgan Stanley with a report on Titan. They maintained an overweight stance, and well, when it comes to their price target, they've actually hiked the price target to around 1,250 from around 1,120. The reason behind this hike in price targets is that Morgan Stanley suggests that the risk reward is skewed towards the upside now after the kind of correction that we've seen in Titan. Moreover, they're seeing that expect acceleration in revenue growth and also expansion in operating margins, well, at the expense of the unorganized sector to a certain extent. And the visibility when it comes to growth and earnings is there for the long term. And in fact, they see that they expect a 50% upside on the stock from a 12 to an 18-month perspective, and they expect the stock to move up by as much as 2 times over the span of the next 3 odd years. And that of course is their base case. So that's as far far as Titan is concerned. But Abhimanyu, I'm going to come back to you on Titan. We have seen Titan come off quite substantially. We've also seen a lot of marquee investors, excuse me, partly exit the stock. But at this point in time, at the price at which Titan is currently going at, what is your view and what would you make of it?
See, I think so. The issue with Titan is not in terms of business model, because clearly the franchise that they build is quite great. I think so. Last quarter we had seen a significant improvement in margin, but I think so the management had indicated that some kind of that margin expansion may not be sustainable for a longer duration of time. Going forward, the 25% kind of growth that they've been talking about is clearly achievable. But I think so in the overall environment, when you have a bond yield being higher, so there could be a slight dip in terms of multiples that we are providing to these companies. So that is my only issue with Titan. From the current levels, I would say around a 15% upside in Titan is quite feasible. If you're looking for a 30% return from the stock, I don't think so that is right now seems likely, considering I think so the market sentiment that we are right now going through. Overall, it's a decent business. So obviously, if it corrects because of the market fall, then obviously one should be more aggressive and look at accumulating the stock.
Interesting. Abhimanyu, I don't know if the morning meeting today included any chat about BEL. Now that stock has been hammered out of shape because of these beliefs that the cuts on the PBT margins would be high. The management clarifying that it will only be to the extent of about 100 basis points. Do you guys have coverage here at all?
Yes, so in BL we do track it, but not actively. I think so. See, with all these companies which are more related to the government capex, what will be the future going forward? We first of all had only 1 or 2 companies to look at. Now we have around 4 or 5 other companies also which have recently got listed. I think so. We are still not certain about how consistent the order book is going to be going forward. And clearly, with the increasing cost inflation happening, margins are going to be an issue. But I have not looked at it today to give you a better answer on what exactly is happening right now.
Okay, well, with that, let's bring in our technical experts for the day. We have Brijesh, Bhatia, Head of Research at Dealmoney Securities, who joins us. And we also have Chandan, Taparia of Motilal Oswal Securities joining us. Good morning to both of you. Well, Brijesh, I'm going to start off with you. Well, your view on the indices now. It's been a bit confusing, especially after the substantial weakness we saw, in the 3 or 4 sessions ago. And yesterday, we've seen a little bit of reversal. What do you make of Qs now?
I think market would slightly take a good upside momentum towards 11,200, 250. And if you look at the momentum in these expiry, it's clearly a brutal for the options writer. And with the 11,000 puts being aggressively written yesterday to the tune of around 4.5 lakhs. I think 11,000 will act as a now for this couple of days of expiry. 11,000 will hold as a strong support zone, and the unwinding seen in the calls at the higher levels, 11,200, 11,300. This is the first time in last 4 or 5 trading sessions that we have seen unwinding in calls. So I think momentum would slightly take higher towards markets for 11,200, 250 on the upside. And I think with the markets being volatile yesterday, I think best bet would be going via options on call rather than looking for buying in futures or sort of.
Okay, Chandan, good morning to you as well. Your view when it comes to the benchmark indices?
And actually, if I can slip in one question that I've been asking you as well. Chandan, this 11,000 strike on the put, it's held out firmly till now. Is that a key pivot to monitor?
See, first looking at the market, in this series we are down by around 5.5%. Market is trading lower than its volume weighted average. And we have seen significant churn in the put OI congestion in most of the part of the series. At the beginning of series, maximum put OI was at 11,500, 400, shifted to 11,200, now shifting to 11,000. Fresh put writing was seen at 10,800 as well. But the way yesterday it recovered, with some decline in the volatility, indicates somehow it will try to respect to 10,950, 980 kind of zone. We are at wicks of 16.5 level, that is highest level in 7 months. So we cannot exactly see that 11,000 is likely to exactly respect. But yes, the put writer of 11,000 now will try to safeguard. So because of that, we are looking at support to near to 10,980 kind of level. Now looking at the upside, the market has gone into the deep oversold territory, whether you talk about the Nifty and Bank Nifty, and because of that, some bounce could be seen. However, the immediate trend is weak because on weekly basis, we are making lower top, lower bottom formation. Our market was respecting to every small resistance zone like 11,333, 11,171, 11,080. And today, if manages to surpass the first level of resistance, that is 11,080, then it may head towards next level of hurdle towards 11,171. So we are looking at bounce towards 11,171, and we have to see whether these levels are being respected or not. But as of now, the way market has turned from the deep oversold territory with some put writing activity at 11,000, some bounce could be seen in the market. And to play the same bounce, one can go with buying option or can go with the bull call spread by buying one lot of 11,100 calls, selling one lot of 11,200, and after the positive opening, the spread might be around 25-30 rupees to trade the long side or to play the bounce toward 11,171 kind of level.
Okay. Interesting. So, well, if you're not a risk-averse investor and know how to play options well, I think that was an interesting strategy put out by Chandan Taparia. Before we get in stock-specific recommendations from both our guests, it's time for getting in our special segment, Bloomberg Edge, wherein Jayesh Khilnani tells us about a pattern that the Bloomberg terminal has thrown up on a stock. And Jayesh, what's the stock on our radar today?
Morning, Neeraj. It's Motherson Sumi. That is because more than 80% of the analysts covering the stock have a buy recommendation, and the target price potential is nearly 40% from where the current price is. And with yesterday's close, the relative strength index indicator has turned positive, thereby giving a buy signal. First, let's have a look at the RSI and the theory behind it. It's an indicator which measures the momentum behind the prices and helps you to identify the overbought and oversold levels. Few conditions that you have to keep in mind are overbought when the RSI is above 70 and oversold when the RSI is below 30. Now you have to watch out for the RSI crossing 30 from below. That's where you get your buy signal, and when the RSI crosses 70 from above, that's where you get your sell signal. Now, that's the last 6-month chart of Motherson Sumi, and you can see that the stock has fallen sharply from 190 levels to currently at about 130 odd, and the bottom panel shows you the RSI indicator. When you zoom into this, it will show you that the RSI has in fact dipped below 30 and is now moved above, just showing you an upward trajectory. So there could be some bit of bounce back that can be expected from the stock.
Okay, and how well has RSI worked for Motherson Sumi in the past, Jayesh?
Neeraj, last 1 year, if you had bought all such indications, average profit on each of the trades would be about 4.5% to 5%.
Okay, well, there you have it. Keep an eye on Motherson Sumi, and, well, at least as far as the technicals are concerned, indicating a buy at this point in time. But Chandan, I'm going to come back to you on the stocks that you're recommending for us in today's job trade.
Yes, looking at the trading ideas, will continue to be with the strength even after the recovery in the market. First trade will be buy on SCL Tech. The stock is continuously making high tops, high bottom formation on the weekly scale. Recently, it has given a small pole and flag breakout and entering into the new high territory. It has surpassed immediate hurdle of 1090, 1100 zone and holding above the same. So expecting the positive momentum with a stop loss of 1090, and it can head towards 1150, 1160 zone. Second trade will be from the pharma pick. We are witnessing some bottom out process in the pharma after the consolidation of last couple of trading session. Nifty Pharma Index has been respecting to previous breakout zone. So it's a classical example of resistance turning as a support, and a small bounce back could lead to the fresh momentum in the pharma sector. So positive on the Divi Slave, Oro Pharma, Lupin, Biocon. And looking at the price structure, we are witnessing long built up in Biocon and recommending the same for an up move towards 728, and one can buy Biocon with a stop loss of 635.
All right, and Brijesh, what about you? Stocks that you are recommending today?
Yeah, unfortunately, I am also long on HCL Tech. If you look at the momentum, it is being strongly, IT is being holding on to the markets, and with the rupee momentum, these IT stocks are having any benefits. And we have seen HCL Tech, if you look at the point and figure charts, we have witnessing the triple top breakout, which is generally a bullish pattern, and it has been initiated at around 1105. So at the closing of around 1116, I think for 2 to 3 weeks, I think the 100 points upside can be seen. The target of around 1215 with the stop loss of 1068 could be expected in HCL Tech for 2 to 3 weeks. Another stocks I would look for is the IndusInd Bank, though private bank has been aggressively beaten down, but importantly IndusInd Bank is holding on to its previous low. And if I look at the harmonic patterns, there is a bullish shark harmonic pattern has been witnessed, and markets has been already in the oversold. The stock has been already in the oversold, and it has been corrected around 20-30% from the highs. So I think with the risk reward, strong risk reward ratios, I think I will go long at around 690, 695 zone for the target of around 1750, 1760 with the stop loss of 1640 for the time duration of 1 to 2 weeks. Another stocks is the Dr. Reddy, Pharma being the good momentum, and we have seen Dr. Reddy breaking out of the bullish pennant, which is generally a consolidation of triangle, and with the pole keeping the target of around 2680 on the stock with the stop loss of 2580. Dr. Reddy would be a good bet to go long. And on the index side, I would slightly go long via call, buying 11,150 call, which has closed around 38 rupees. And the target on can be expected is around 65 to 80 on the upside, with the stop loss of around 15 on the downside.
Okay, some interesting theories out there, some interesting stocks too. So watch out for those. Abhimanyu, just looking at what happened in trade yesterday, even before the comments came in from the LIC chairman, a pocket that had started showing some bit of a bounce were the insurance companies, the life insurance companies in particular. ICICI Prudential went up a bit, HDFC Life went up 5%, and these stocks have corrected quite a bit. What is the coverage that you guys have in this space, and do any of these, after the correction, look like attractive investing opportunities?
Yeah, so absolutely, I think so. Insurance is one good space that one can look at. See, I think so. To an extent, there was some fear in the market, because insurance typically need to, on their investment book, need to keep 80% of their book in AAA bonds. So if there are some more, cases like IL&FS where there's an issue with the book for a AAA rated bond, so that could have created problem for them. That was one of the key reasons why insurance companies stocks had gone down. Going forward, if you see from a margin of safety angle, I think so the growth rate of this particular industry is likely to be better relative to what we are seeing for other financial sector, because I think so if you look at, though there's been a slight dip in terms of growth rate of premium collections, going forward, I think so persistency ratio clearly has been going up for the industry, and as such, I think so profitability for the sector should go up. The leverage in the sector is not that high. So from that perspective, I think so insurance is a clear sector that is likely to be a winner over the next couple of years. So, stocks like ICICI Prudential should be one that one can look at buying at this particular level. It does look as an attractive buy.
Right, Abhimanyu, what we also understand is the news that the insurance regulator has made it mandatory for and extended the requirement of insurance for two-wheelers, which means that two-wheelers are likely to become more expensive to a certain extent. What's your view on this sector right now, and how would you deal with some of these big names in the two-wheeler space?
Sure. So what we are seeing as a result of that is that there's some kind of softness in terms of two-wheeler demand. Our channel checks are suggesting over last couple of weeks, even the higher pricing of fuel, which is petrol, is also impacting demand. Coming to insurance, clearly it might dampen this spirit in terms of having higher volume in terms of people if they buy newer vehicles, But overall, if you see, as the rates go up, because if, you're going to increase the amount of money that somebody needs to pay for insurance, that clearly will, increase the overall size of the book. And from that perspective, it's something which will be a positive for the sector overall, which I mean to say the general insurance companies and not life.
All right, well, yeah.
No, I was just wondering if I can take a quick check with Chandan on either HDFC Life or ICICI Prudential. Chandan, quick 30 seconds. Would you trade either of these two names?
Yes, looking at the ICICI Pru, the stock is after a long underperformance. Some buying interest was visible on last trading session, and mechanical indicators are showing some sign of the deep oversold territory and reversal from the same. The bullish horn kind of pattern was witnessed on the daily scale. So because of that, some up move could be seen, which may take it to 370, 375 kind of level in next couple of days.
Okay, well, there you have it. That's the view coming in on some of your life insurance companies, a fundamental and a technical view. We're just about 15 seconds left for the pre-open race to come in. So let's take a look at the Asian markets. And there's more strength for the Shanghai and the Hang Seng. Not too much to speak for the Nikkei. But when it comes to the SGX Nifty, well, it's largely where we've started. Plus of around 60 to 65 odd points at this point in time. And we've started to get those pre-open rates for the Nifty as well as Sensex. And it's likely that we're going to see some green, at least as far as the opening is concerned. The Sensex advancing by 1%, the Nifty advancing by 0.7%. And that's where your Indian rupee is at this point in time. Well, it's largely flattish at around 72.7. So, well, we don't really have too much to speak for when it comes to the rupee, which is already at, trading at reasonably low levels as compared to the US dollar. But let's pull up some of the big names that we've seen move. And let's start off with something like a Yes Bank, because that was under pressure. It has been in the news, and we should take a look at it. At this point in time, it's indicating an up move of 10%. Of course, these are pre-open rates. We're going to have to wait and watch and let these rates settle. But let's pull up a Kotak Mahindra Bank as well as an SBI, because these were some of the other banks which did advance in trade yesterday. So Kotak Mahindra Bank seeing an uptick around 0.4%, SBI up as much as 0.6%. HDFC is the other one from the NBFC space, the largest NBFC, and that is showing marginal gains. Indiabulls Housing Finance, on the other hand, which did see substantial weakness yesterday, is looking at an uptick of around 5.4% at this point in time as far as pre-open rates are concerned. And I also want to pull up something like a Bajaj Finance, because that was another stock which did see a little bit of an up move following the rest of the pack. That's also indicating an up move around 1.4%. Let's bring in the auto stocks, considering the insurance news that we've had, and something like Bajaj Auto or Hero MotoCorp. Hero MotoCorp is looking at an up move around 0.5%. Bajaj Auto also indicating an up move around 0.8%. TVS Motor Company there. And I also want to bring up something like a Motherson Sumi, because it did see a little bit of a reversal yesterday. And it is indicating a further up move of around 1%. Does this hold? Let's wait and watch. But that's what we're tracking with respect to some of the relatively larger names, Neeraj.
Well, I'm just trying to see what's falling and what's not. 8K Miles, for example, seems to have a small downtick today, another 5% downtick today, not a small downtick, another 5% downtick. So does Indiabulls Ventures. Do watch out for these two names. What's doing well? ILFS Transport showing an uptick there. Dena Bank is showing an uptick there. Both of them stocks in news. The sugar pack continues to inch up higher, and after a brief course correction, they're back to the winning ways. So good start for the sugar names. Lastly, just want to mark BEL or Bhatia Electronics and see if that is reacting at all to what the management beat was. Yes, about a 3 percentage point uptick coming in Bhatia Electronics. The stock in focus will be, of course, Yes Bank. And let's see what happens there. We'll keep on marking it during the course of the pre-open session and then see what happens thereof. I don't know why it would be up 8%, but nevertheless, yeah, now seeing some bit of a correction as well. Let's wait and watch though. Let's not be early in our calling. However, before we move back to our guests, let's get in Somit Sarkaru Johnson with the top brokerage calls of the day. Somit, good morning.
Good morning, Neeraj. On the big brokerage calls for the day, first we have is UBS on Reliance Industries. Now, the brokerage has maintained its sell rating on the stock but has raised the target price to 1100 rupees from 870 rupees, which suggests a potential downside of only 11%. Now, brokerage is expecting a strong petrochemical performance and a retail business performance from the company. Now, for the petchem business, the feedstock diversification will play out well for the company and support the margin, says the brokerage. And for Jio, the brokerage is expecting strong subscriber additions to continue, but ARPU to remain subdued going forward. Now, UBS has raised the target price as it has increased its refining and petrochemical estimates on the back of rupee depreciation, but it has still maintained its sell rating as it is expecting Reliance Industries' near-term capital expenditure to remain elevated, leading to a rise in net debt instead of deleveraging that the company is expected to do. Second, we have a CLSA on the oil and gas space. Now, CLSA is expecting a very tight crude market, particularly in the first half of calendar year 2019 on the back of forced production cut by Iran, falling production in Venezuela and on growing global oil demand. Now, this coupled with the key election over the next 6 to 7 months pose a big concern for the oil marketing companies as the marketing margins would be under pressure, says the brokerage. Now, for ONGC, the brokerage says that even if the company is asked to share subsidy, the current stock price implies no downside. Now, on the back of this rising crude prices for CLSA, GAIL, Vedanta and ONGC are the preferred buys.
Okay, Somit, thanks for joining us and taking us through the brokerage calls of the day. I also want to address what's happening at Lupin, and let's take a look at what's happening when it comes to its pre-open. Now, we've seen a substantial correction in Lupin from the levels of around 940 odd over the past 3 weeks. It's come down to levels of around 890. It was one of the top gainers on the Nifty. As you can see, it's at 891. Brijesh, can I come to you and take your view on Lupin right now? What would your approach be to the stock? What would you do with it, and perhaps the levels that you'd keep an eye on?
Definitely, I would go long on Lupin, and if you look at the correction, it has been quietly holding its 200-day DMA, which it has crossed in this recent rally in August. And I think maybe another couple of % down, and I think 840 is the around 200 days average. So around 850, 860 is already tested on the downside level. So I think this would be a good bet looking at the pharma in the strong momentum. I would definitely look for a long opportunity in Lupin and expect around 930, 950 levels in the coming weeks on Lupin again.
Interesting. Abhimanyu, what's the house call on pharma now? They are no longer as cheap as they used to be. Not out of the woods completely maybe as yet, but the stocks are hitting the straps in the last 3 months. Stocks like Biocon are back to 52-week highs. What do you like within this space?
Sure. So I think Biocon is one stock that we clearly like because going forward, the opportunity in biosimilars is pretty large, and with their tie-ups with Mylan and others, the risk contingent for them is low relative to what ideally was the case with them earlier. Clearly, I think so. The opportunity in terms of grow profit for the company could be at least 3x if they are quite successful. So I think 2021 is when one needs to watch when the final delivery of number happens with whatever investment Biocon has been doing over the last couple of years. So from a risk-reward perspective, though the stock is slightly expensive, I think so it should be part of your core portfolio. I think something like a smaller company like Jubilant Life Sciences also looks quite attractive to us. The risk reward there, considering the valuation, also looks quite decent to us. On the US market, the generic, we are still not 100% convinced that, though there has been a reduction in terms of the pricing fall that we were seeing, but still there is a negative number which is coming for the sector. So we want to be quite selective in terms of which companies to pick for. So, in correction, we will probably look at something like a Torrent where because of Unicam, acquisition, we are seeing a significant improvement in revenue per MR. That could be an interesting stock to look. And if you want to play the US generic market, then something like Aurobindo would be a better bet for us, considering the significant amount of ANDA pipelines being available for the company relative to its peers.
Interesting. By the way, just mark the sugar space. A tiny tune, Bajaj Hindustan, extremely leveraged. I'm not saying this is good stock or a bad stock. I have no comments out there. That stock is back up to about 11 odd rupees. Balrampur Chini is back to 85. And remember, in yesterday's session as well, the sugar companies did reasonably well. So after getting beaten down a little bit after a brief rally, the stocks are again resuming that rally. Abhimanyu, it's a forgotten space. I don't think institutional or retail brokerages have too much of coverage here. But have the recent changes tempted you to maybe look at some of the sugar companies afresh, or best kept in the cold storage?
So I think so the views in such a sector are more from a trading perspective, that you have more government SOPs. But I think so the currency depreciation is something which really should help the sector going forward, which has been saddled with so much of inventory. In terms of players, I think so Balrampur Chini could be the only one that one can look at, considering the low amount of leverage that it has, whereas the other companies in terms of debt are pretty high. And going forward, as we see interest rate going up, I don't see profitability returning to the sector so easily. So Balrampur Chini is the only one, but that also from a very short-term perspective. I don't think so it's a sector to look at from a long-term perspective, because it's simply too volatile.
Okay, well, there you have. That's a view on your sugar stocks. But before we take a look at what's in store for today, okay, I think we should take all you need to know, Neeraj. Right?
Yeah, let's start with that. Minutes from Market Open. Let's tell you all that you need to know to stay ahead in trade today. Yes Bank board says the search is on for CMD Rana Kapoor's successor. The board also seeks an extension from the RBI of Rana Kapoor's tenure till September 30th, 2019.
And Glenmark Pharma will consider a buyback of its foreign currency debt worth $200 million on September 28th.
Minda Industries board has approved setting up of a new manufacturing plant of two-wheeler alloy wheels in Maharashtra. An estimated 500 crore rupees will be invested for the project, and the production is expected to start from November 2019. The stock likely to start off higher.
And BEL says that the new Defense Ministry norms may have an impact on margins by 50 to 100 basis points.
In brokerage calls, Morgan Stanley has given Titan an overweight rating with a revised target of 1,250 rupees from 1,120, as they believe the company's risk-reward ratio is favorable.
And Credit Suisse warns clients against doing any bottom fishing in the battered NBFC sector.
That makes two, because Abhimanyu Sofat from IIFL also is warning the same. And the stocks are chalk and cheese today. But Diwan Housing and Indiabulls Housing Finance, at least Agam, they seem to have started off reasonably okay.
Right.
Chandan, you want to come in on just a pure trade from an expiry perspective on these two? Would you contemplate trading in Indiabulls Housing Finance or a Diwan Housing?
See, it would be very tough to trade in these stocks, especially if expiry is concerned, because most of these stocks are trading lower than volume weighted average. Especially if I talk about the Indiabulls Housing, the stock is down by around 25%, trading lower than volume weighted average, given the breakdown. So it would be very tough to understand the option data, and we have seen significant change in the OI or the maximum put OI congestion. So better to avoid, or we'll go with the spread if that is required. But as of now, we'll avoid looking at the price structure and the volatility in this index, that is stock that is jumped by around 40 to 45% IVs per se.
Chandan, I have a question with regards to the upcoming expiry. The first observation made by many is that the open interest when it comes to a lot of these option strikes this time around is a lot lower as compared to what we've seen in the previous couple of series. And to a certain extent, some are guessing that this is because a lot of these option traders are hesitant to sell options or write options in this series. Secondly, and perhaps this is connected, the rollovers this time around are lower than the previous 3 to 4 month average. If you combine both these factors, what do you make of these cues as we move in, keeping the expiry in mind?
Yes, these are the very factual database, and especially when volatility spikes more than 15 zone, and which is right now near to 16.68, and yesterday it made high near to 18.31. Traders avoid the writing activities in the market, because when volatility is near to 18, the 100-200 points movement cannot be ruled out in the market, and especially in such kind of scenario, if you are writing 300 points out of the money calls and puts, still you are not gaining. So that is the reason that we have seen the option activity or OI congestion is at deep OTM strikes, whether in the call or put OI concentration is concerned. Similarly, in the bank nifty also, we are not observing the OI or put writing of more than 5 lakhs, 7 lakhs in any particular strike, looking at this expiry per se. So what I understand, if volatility index slips below 15, 14.5, then only some OI inventory will build in the market. Till VIX remains beyond 15.5, 16 zone, same kind of scenario or the penny kind of scenario will be there in the market. And especially the way market has fallen down and the put writer continuously shifted lower. Usually we see 2 times of shifting in the OI congestion, but this time 3 times we have seen the shifting of the OI congestion from 11,500, 400, 200 and 11,000. So that's why the put writer have surrendered and they are waiting for some volatility to cool off. And that is the reason that we have not seen many meaningful OI inventory in the next series per se.
Right, well, we just have about a minute left, so I'm going to quickly take our technical experts' top pick of the day. Brijesh, coming to you, your top call for today.
I would bet on Dr. Reddy long side for the target of around 268085 and stop loss would be around 250.
And Chandan, your top pick for today?
Yeah, mention about SCL Tech and Biocon also, and positive on the most of the pharma counter, whether you talk about the DV Slip, Biocon, Dr. Reddy and all.
If you had to nail it down to one stock, which one would that be?
Will be with Biocon.
Okay. Brijesh as well as Chandan. Gentlemen, thank you so much for taking the time out and being with us. Abhimanyu just requested to stay on. We'll take in one final thought from you post-market open. But the market open certainly seems to be on a positive note. We have about 20 odd seconds left. Remember, the Nifty Bank, the Nifty and the Sensex, all of them point towards 0.75% kind of a gain for our markets. Add to that, I mean, add this to the late surge in trade yesterday, and you've had a fairly good bounce coming in the last 1.5 hours of cumulative trade. But see how we started off. We got 0.75%, yes, 0.75% for the Nifty, or maybe 2/3% for the Nifty, Sensex and the Nifty Bank. Just pulling back a little bit, but not conclusive. For now, starting off in the green. The mid caps and the small caps, remember, small caps were still in the red yesterday. In today's session, marginally higher. The mid cap index showed a terrific bounce, closed 1% higher in trade yesterday, and now about 100 points higher. So not a bad start for the mid caps and the small caps as well. Let's see if this lasts. Bring up the heat map and try and show you what's moving and what's not, with the indices still hovering around this 0.64% kind of gains. A sea of green, very little red. In fact, save for technology, which is probably just seeing a trading pause, to be honest. No deep gashes here. Almost everything is doing well. Indiabulls Housing Finance is up 3%. Titan, the Morgan Stanley overweight, 2% higher. Yes Bank reacts about a couple of percentage points higher. iShares about a couple of percentage points. HDFC, the heavyweight, is up about 1% as well. So banks and financials right up there, helping the index do well. The index too, by the way, is cooling off a little bit, now just about 0.5% higher. So it's no longer 0.7, 0.8%, just about 0.4%. But maybe some of the trading calls that were initiated in the last half an hour of trade yesterday might be checking out as well, because this is very close to expiry. We've cooled off very rapidly from the highs of the day. Now just about 1/3% for the indices. Very quickly, just a couple of trends before I hand it over to Agam for what's happening across the bourses. 2 or 3 pockets of strength that I want to highlight. These are the companies that had the biggest surge in the last 1 hour of trade or last half an hour of trade yesterday, and all of them are starting off on a very, very flat note. Shriram Transport may be marginally higher. What about companies in news then? Just bring up a couple of these stocks. Firstly, the margin hit is overdone. Estimates are overdone as per the management for BEL, and that stock starts off 4% higher. So a good start to this counter in the session today. Last but not the least, Biocon. It's been on the trading screen for a bunch of people. A top call trading and investment wise as well, near 52-week highs. That stock is up about 1.25%. Agam, what are you spotting?
Well, I have Uflex right at the top of my list. It's advancing by as much as 7%. And we also have, Bajaj Hindustan continuing to advance, as Neeraj has already spoken to us about that. MTNL is making a surprising move. I know it's a penny stock, but that is also up and about. That's up as much as, nearly 6%. Minda Industries, which is also in the news, that also continues to advance. That's up for around 5.3%. We have good gains in Greenply Industries, ITI as well as Jubilant Life Sciences. All of them advancing quite substantially, and on the whole, the momentum is clearly towards the gainers in today's day of trade, considering the positive opening that we've had. 8K Miles Software, on the other hand, on the back of the alleged forgery at a promoter entity, is, well, looking at another decline around 5%. India Bulls Ventures is also locked in a lower circuit of 5% right now. It's the same for Bombay Dyeing and JBF Industries. So a lot of these usual suspects, but well, among the other stocks which are losing out to a certain extent, Phenolics Cables, that's down 3.8%, and we also have Bombay Rayon declining by around 3.2%. So no surprises there, Neeraj, largely in line, and the momentum is with those which are gaining.
Yeah, certainly seems to be the case. The question mark only is whether this will last or no. Abhimanyu, what's the larger call? I mean, are valuations or the setup compelling enough to go out and make fresh investments, or let the volatile period pass? I mean, you know, the last few days bonds and money markets are in focus, and we've completely forgotten about crude and the rupee and the impact that both of those factors working against us have. Would you put large fresh money to work right now or stay on the sidelines?
So I think so what you're saying is correct. I think so, you know, excluding what's happening in the NBFC and, you know, the money markets, there's more bad news clearly because of crude being so high, and we, you know, running such a high deficit. Probably the current account deficit number, you know, will go to around 3%. So though, you know, currency depreciation is not bad for an economy like India, where export growth has been nearly zero for last couple of years. Our exports had doubled in 2000 to 2011, and post that we have seen that our share of, you know, how of overall trade for exports has been stable. So we have been facing a lot of challenging on the manufacturing side, and tailwinds in terms of currency depreciation should help. So right now, our view is that obviously be more on the margin of safety side. So select pharmaceutical, even something like IT, where if we find you know, attractive price point, so something like a L&T Infotech, or maybe looking at HCL Tech, you know, those kind of stocks are where one should be putting money right now. Within the BFSI segment, we will be more sanguine about prospect of something like an ICICI Bank, where we have more comfort going forward in terms of, you know, the ability to get out of what's happening on the NPAs. Mind you, still the SME sector, which is probably close to around 15% of the overall book for the entire system, RBI has been quite lenient in terms of, you know, recognition of those. So they had allowed for certain amount of SMEs for you know, non-payment for beyond 180 days. You know, they had given some leeway to financial institutions in terms of recognizing that. So there are challenges in the system which clearly are there, which still have not come out. Having said that, I think so at the right price point, you know, NBFCs would look attractive. So something like a Bajaj Finance, obviously, you know, at every lower price should be a stock that one can look at. In case of, you know, other sectors, if you're talking about, I think the consumers, you might see slight impact because as we see currency depreciation leading to a hit on the margins. So there may be some derating in terms of multiple. ITC looks quite interesting to us. In terms of valuation, it's trading at around 26 odd times. So from a margin of safety angle, I think so ITC is one stock where one can clearly go out and buy even at this particular price point.
Okay, Abhimanyu, we'll leave it at that. Thank you so much for joining us and taking us through your views when it comes to the markets. But we'll move on, and we have Andrew Holland joining us, the CEO at Avendus Capital Alternate Strategies this morning. Andrew, good morning, and thank you so much for joining us. I'm going to start off with the obvious questions, and that has to do with the NBFCs right now. How would you distinguish between the relatively larger ones and, well, to name them something like an HDFC or, for that matter, Bajaj Finance, as compared to some of the relatively smaller ones such as Dealmoney Housing Finance? What would your approach be, especially considering we have seen so much volatility in a lot of these names?
You know, sometimes it's you know, the easy answer is sometimes it's just that it's better to sit back and let some of it play out. And then, you know, you'll fortunately or unfortunately, whichever way you think about it, everyone gets tarred with the same brush, the good and the bad and the ugly. So you sometimes have to let that kind of play out a little bit in the initial stages. But I think, you know, LIC's announcement yesterday, or statement saying that they would, you know, bail out or would not let ILFS collapse, is really a kind of a semi-government backing to say that, you know, we're going to sort this out. So I think, you know, if that is the case, you know, liquidity can be, you know, kind of put into the market through the RBI. So I'm becoming a little less worried about this whole episode in the very short term, and feel that, you know, the quality stocks, the large cap NBFCs, you know, have just been hit for no rhyme or reason along with the whole thing. They'll be the first ones to recover. I think there'll still be question marks over the smaller ones, where share prices have fallen a lot more significantly, because, you know, market, you know, to my mind, market sometimes knows more than I do. So I think that it'll take some time for those companies to hopefully consolidate from where we are, and then gradually kind of inch up. But, you know, this is just not about the NBFC sector. It's about the whole of the market for the past few months. You've seen, you know, a lot of the large cap blue chip names kind of coming down, and the index being propped up by, I would say, second line kind of companies. And I think that switch back to quality and back to the blue chips will start to happen now, because the one good thing that happened is that we're now starting to price in risk. And risk was something that people were not, you know, not remembering that was there. And once you get it in the bond market, where, you know, no one really expects to lose money, then it does tell you that there are risks out there.
Andrew, good morning. Neeraj here. Coincidentally, I just wrote about this very aspect that you spoke about today. The columns published today on the site. But just wondering, Andrew, I just wanted a small thought from you on this. The valuation multiple contraction that has happened for a lot of these poster boys, as I have called them in my column, haven't still brought them down to numbers which are mouth-watering. I mean, HUL, even after this correction that we've seen of 8-9%, still trades in northwards of 50 times, 52 times 1 year forward multiples. Bajaj Finance, 7.5 times price to book. You can argue that Maruti too, despite the 2,000 point fall, is not exactly cheap. You mentioned that the revert back to quality can happen. Is it too soon? And would you believe that there needs to be some more pullback before that revert can happen? Or would you be comfortable putting fresh money to work in the blue chips?
See, I think, you know, at the peak of the fall recently, you know, we became a little bit more constructive. As you're aware, that we've been quite cautious about not only the Indian market but global markets, and that's somewhat played out in the past few days or past week or so. So if I'm looking forward, which I try and do in that, you know, what do I see ahead of me? Well, I see 3 or 4 things. One is that we'll see an interest rate hike tonight by the Fed, that's for sure. That's been pretty much baked in. We will have to wait and see the commentary. The second point is, you know, I think the optimism you know, before the midterm elections in the US will probably favor a trade deal. So I think that will keep markets kind of more optimistic than pessimistic, at least in the first half of October. And then, you know, a lot of the negativity around emerging markets, you know, a lot of global brokers have now turned that around and said, you know, it's time to buy. So what you could see is, you know, emerging markets start to recover from their, you know, that they're more beaten down than the NBFC sector, I can assure you, which will probably drag India. Now, relatively, we might still underperform, but we'll drag ourselves up. So this liquidity issue that, you know, we've all been thinking about, you know, seems to my mind, you know, LIC is there, so it's a backstop to some extent. I'm sure now we'll just go into what the real problems were in the companies, and therefore, you know, what's going to lead the rally is going to be the, you know, the blue chips, which I'm saying, you know, usually in these kind of circumstances would be the ones that hold up, but they actually fell before the before the market fall, which is what I'm trying to say, this dichotomy between the blue chips, which were being derated, which we couldn't work out, to companies which were just trading ahead for no real reason.
But Andrew, then that brings forth the question that if LIC or any such government institution is the backstop for the NBFC space, what's the backstop for EMs which will face pressure because of, one, the dollar strength and their respective currency weaknesses, and crude, which is, well, for now firmly above 80 and headed to maybe higher levels. No one can predict crude really, but if experts are to be believed, there is more upside here. And what's the backstop to such a problem for EMs?
So I think if you think about it, the currencies in most of the emerging markets have suffered very badly. If I just take not just the currencies, but the markets. If I take China, for example, I think the currency is down about 10% or so, and the market's down 25%, and I can go on in Argentina and Brazil and anywhere else. So, a lot of the damage has already been done on the basis that interest rates are rising in the US, and for the first time in 8-10 years, we're having to price in higher short-term interest rates on debt, which is 2 times larger than it was in 2008. So all of that's, I think, been priced into the emerging markets. So I'm not saying that things will change so dramatically, but if you do get some kind of conciliation in the trade wars, then obviously these emerging markets will benefit from that in terms of their exports going forward. So that's that's what I think is the play for emerging markets, and the valuations there are very compelling. In a lot of the places of 10 to 11 times, and that's where I think the action will be. India has relatively outperformed because we're seen as a defensive market in a trade war because we're a domestic driven economy. So that swing will change towards emerging markets. India will just get dragged up.
Right, Andrew, I do want to talk a little more about crude. At $80 a barrel, we have seen a little bit of a rise in a lot of these crude-linked sectors, specifically oil exploration companies as well as oil marketing companies. What's your view here?
So I think, let me put it 2 ways for you. And it goes back to if we have an escalation in trade wars, which if we do, then I see the oil price coming back towards the kind of 70 level very quickly. If we don't, then obviously you could see it getting towards that kind of 90 level very quickly as well, which doesn't bode well for India. So actually, a no trade war is not a positive for India relatively to other emerging markets. So that's one thing I would say. I think the currency, which had been stable for so many years, was actually overvalued. And I think the real value is around 72. I think that factors in where the oil price is today. Could it slip a little bit more? Yes, but I think if there's no trade war, then I think prices anyway will drop globally. So deflation, a little bit of deflation will come into the global economies. And that will stave off probably interest rate rises in the very short term, and give us the opportunity, therefore, then to kind of see that the liquidity is in our system, and offset some of that rupee depreciation. The thing about OMCs, which is the question you asked, is that I just don't know when the government will intervene. They haven't intervened. Maybe they will nearer to the the elections, the state elections in November. It's just odd that they haven't, given where prices are. It's the right thing to do nothing, don't get me wrong, but I think we'll see some action from the government as we get towards those state elections.
Right, Andrew Holland, we leave it at that. Thank you so much for joining us and taking us through your views on the markets.
Thank you.
All right, well, with that, we slip into a short break, but after being beyond, we do discuss the developments in the banking sector, from Yes Bank's leadership challenges to the NPA cleanup at the PSU banks with Saswata Guha of Fitch Ratings, and the rising competition in the liquor space with Shekhar Swarup of Globus Spirits. Lots more lined up. Stay tuned in.
Maybe reading out of
Good news, guys. Got a promotion and a damn good raise.
Congrats, beta.
Congrats मेरी तरफ से भी.
From mama too.
वाह, रेज. अब तो इंश्योरेंस पॉलिसी ले ले.
इंश्योरेंस? कौन सी कंपनी से लूं?
सोचना क्या, चूज वही जिस पर हो पूरा भरोसा.
वीरू, go for convenience. My company is online, quick and simple.
बेटा, बट पॉलिसी समझाएगा कौन?
वेबसाइट पे सब है पापा. I can even call and ask.
क्लेम सेटलमेंट का रेशो क्या है? मेरी कंपनी का 98% से ज्यादा है.
That's good, but आज की generation wants everything online. Easy premium payment options, loan facilities और wide range of products.
अरे पापा दीदी, I will decide. Just send your links now. तुम दोनों भी ना. Same choice. LIC.
LIC ट्रेंडिंग विद टाइम्स 62 सालों से हर जनरेशन की पसंद.
When I started juicing to bounce back from a serious injury, I had no idea that it would turn into a passion, that would turn into a brand that provides healthy choices to millions of consumers. Today, my brand is a household name. I am Anuj Rakhian, and my story is a clean and a flavorful one. I'm the raw pressery guy, and I'm here to tell you my story only on Aegon's of Business.
Aegon's of Business never stop. Only on Bloomberg Quint.
I want to talk about how disruptions are coming and how we'll have to weave that into our portfolio, into our investment thesis, because clearly in this whole world of disruption there will be few winners, but those winners will make tremendous amount of wealth.
Welcome back. You're with us right here on Indian Open. The equity markets off the highs of the day, but about 0.25% in the green as well. So for now, we're holding on to those levels. Let's wait and watch if these last. However, I must say that the last 12 months, 18 months, maybe for eternity, there is never a dull moment if you are indeed looking at the Indian financial space. Stressed assets, missed repayment schedules, and now a new PSU banks merger in the works. Add to that RBI's recent spring cleaning drive in the private banking space. And a lot of these factors have had a huge bearing on ratings as well, which turn influence investments too. So let's pick up some of these factors and the bearing that will have on ratings, and how do people within the rating agency companies view some of these developments. Saswata Guha is director at Fitch Ratings India, joins us right now on the show to talk about all of this and more. Saswata, good morning. Thank you so much for joining in. This is Neeraj here. A couple of things that I really wanted to talk about. One was this latest developments in the private banking space, and Yes Bank is right in the thick of things. The other is the whole PSU banking space. Yesterday, Finance Minister Arun Jaitley has come out and said that there will be effective action taken against frauds, willful defaults, and NPAs within the PSU banks are reducing, cleanup is happening. How are you guys watching at all of these developments within the PSU banking space? And do you believe that that entire lot is a much better lot right now than what it was, say, maybe 12 months ago, or not quite?
Right. Good morning again. Well, as you said, I mean, I totally agree that it's never a dull moment in this space, and you're right to point out the issues which are currently obviously have been plaguing the PSU sector, but also now the private sector banks. I mean, let me just say that at the outset that governance is one of the key areas, or rather very important area that goes into our rating framework. And generally, the view has been that governance at PSU banks, because of the excessive influence of the government in terms of day-to-day matters, and also to an extent on the board, obviously does impact or has been impacting the governance at PSU banks. But what we are seeing of late, particularly in the private sector, have also sort of raised certain concerns in terms of how the management and the board has conducted itself in terms of particularly the asset quality issues. And what we're seeing essentially in that sector, and I won't just single out yes, but I think the RBI has taken rather fairly strict action in various cases. And what we're seeing is that the RBI, one, is well within its powers to do that, and two is I think it's increasingly now upping the ante and asking for greater accountability from these banks. What has been a bit bemusing to us is that why the RBI has not been able to exercise similar influence on PSU banks, which arguably have been in a lot more stress and a lot longer in comparison to the private sector banks. Now, coming to your other question in terms of are public sector banks looking less weaker? Well, the fact of the matter is we still have about 11 PSU banks which are under RBI's prompt corrective framework. And there are approximately 6 more banks which are pretty much out of the game, because although they may not be under PCA, but they are in breach of at least one or other risk threshold of that framework, which effectively means that their ability to pursue meaningful growth is completely out of the window for now. So I think you have a lot of 20 banks, of which 17 are not growing or are growing very, very in smaller numbers, which goes to show that clearly they're not out of the woods. But what I would say is that if you look at the asset quality problem now compared to perhaps 2 years back, I think thanks to the various interventions by the RBI in terms of asset quality review and NCLT and so on and so forth, I think a lot of the legacy problems are now out in the open in comparison to what they were perhaps 2 years back. But still, I think the huge baggage of bad loans that the PSU banks carry continues to be a big overhang on their overall operations, including their earnings. And until and unless they are able to resolve that, I don't necessarily see them coming out in green very soon. And to do all of that, let's be mindful that it needs capital. So on balance, I think the problem is certainly now a lot more in the open, but I think the PSU banks continue to be very weak.
Just wondering though, the FM has said after this PSU banks review meet that bad loans are declining and recoveries are picking up. I know until now in the reported numbers we haven't seen any visible impact, a large visible impact thereof. But in your conversations with banks, are they echoing a similar sentiment? Are you seeing evidence of this?
Well, I think that's the general message that we even get to hear. But I think if you look at say for example, the potential watch list, loans for many of these banks, I think many banks are still reporting watch list loans in the range of anywhere between 1.5% to 2%. And if you see the kind of migration from watch list to NPLs in the last few quarters, I think the number has been in excess of 80%. So I think there is still some element of risk that is there in those balance sheets. The question really is that when do these ratios, or when do the numbers actually turn on a sustainable basis? And for that to happen, I think many of these banks which do not have capital or very, very poorly capitalized today, I think they need that excess capital to be able to pursue recovery at a faster pace. That's one. And then for certain banks which perhaps may be in a better position to grow in comparison to others, I think that growth also needs to sort of kick in for the ratios to start moving downwards. What we are seeing is still a very sort of mixed performance. It's not secular across the board. So I would probably wait and give it at least until the end of this financial year before making a claim that things have finally turned.
What did you make of the outcome of the board meeting at Yes Bank? And I know all of that is subject to the RBI approvals, maybe even the second largest promoter shareholder Rana Kapoor, and I don't know what that camp's view is on all of this, but how are you viewing what's happened in Yes Bank from the time the first piece of news came out until yesterday?
Yes. Well, see, I mean, Yes Bank is a large professionally run organization. It is a listed company, has a lot of stakeholders, and I would expect any kind of change in leadership must be in the interest, one of the obviously the shareholders and the creditors, and two, should be done in a way which is least disruptive. And in that sense, the press release put out by the board of Yes Bank, where they have talked about seeking approval from the RBI for an extension, does not seem to be out of place. I think they're well within their ambit to do that. Of course, the ball subsequently will be in RBI's court, and I think the final decision will rest with the regulator. But I think if the board thinks that a little more time is required to ensure that the transition is well managed, then I think it is not unreasonable.
Okay, let's wait and watch if the RBI is in that camp or no, or whether it views it that way or no. But okay, I get your point. Saswata, my final piece will be, or final query really would be on the larger financial space, the NBFCs, and this whole issue surrounding the liquidity in certain camps. I don't know if the ratings of some of these bonds have been coming off or no. Of course, Indiabulls Housing Finance has released a slew of announcements on the BSE speaking about how the ratings of their paper seems to be on track. DHF has also said so. But because of liquidity or otherwise, and because of the financial health of some of these banks, because growth capital might not be there, so on and so forth, if indeed the valuations have come off, is there a worry from either a rating perspective or just from a watching perspective of the finances or the health of some of these NBFCs?
Yes. Well, if you see the public disclosures of many of these banks, I think the NBFC started featuring in their so-called watch list sectors for quite a few quarters back. So clearly there have been concerns on the sector as a whole. What an event like IIFL and subsequently, what we saw in terms of the market tumbling and a particular share price, I mean, that basically highlights the kind of vulnerability that NBFCs face on the funding side, which can get accentuated very fast and sort of start looking like a contagion when an event of this magnitude happens. But from a rating perspective, I think funding and liquidity from our scheme of things is one of the most key factors in terms of rating NBFIs, and we think that particularly NBFIs which have been growing very, very fast. In general, I think the NBFI sector growth has been quite robust, but I think there are players which are growing in excess of 1.5, 2 times that of the industry average. And in some of those entities, you would see there's been a secular shift in terms of funding towards the short term. I think those are the guys which are really exposed to potential increase in funding costs. I don't yet think the market is going to shut them out, but would that impact NIMs going forward given the recent events? The answer in my opinion is yes.
To your mind, is the impact largely on NIMs alone? I mean, various people that I speak to say that there is not a liquidity risk in the system. There is probably a risk for 2 or 3 of these NBFCs which will not translate into the whole space. But is that your reading as well? And therefore part 2 or part 1 of my question, that all that's happened in the recent past, do you believe that the biggest takeaway from all of that is that liquidity will not be a problem, but the net interest margins for some of these and maybe the growth capital for some of these NBFCs will be a problem?
Well, liquidity, in my opinion, is certainly a problem, and it's been a problem for some time, only accentuated by the OMOs and a couple of other things. So I think there are various market estimates out there, some ranging as high from 1.5 lakh crore to 2 lakh crore worth of deficit. But the point is not that. I think some of the larger NBFIs, the marquee names, will continue to be able to refinance themselves. The question is really at what price, and whether they are able to sort of transmit that to the end borrower. Given that many of these institutions have fairly long-ended asset portfolios, my sense would be that the immediate impact would be on the NIMs. For the smaller ones or the less reputed ones, obviously there is a question mark, because ultimately you have to understand that the NBFI as a sector relies primarily on banks, which, as you rightly pointed earlier, that they themselves are sort of have been in a cautious mode for some time, and two is obviously the capital markets, where yields have just gone off the roof. So from that perspective, if you see, I think the immediate impact, in my opinion, is going to be on the liquidity front, and that would reflect through funding costs. But yes, if subsequently significant asset quality concerns also start surfacing, as I said, that many of these NBFIs have been growing at a fairly brisk pace for the last 3 to 4 years, I think then that would obviously add to the concerns of the market, but we'll obviously have to wait and see if that really happens. But for now, I think NIM is essentially what will be at risk.
Saswata, really appreciate you taking the time out and joining us and speaking on what is arguably the top of the mind of the market right now as well. Thanks for your time.
Thank you.
That's Saswata Guha of Fitch Ratings with his thoughts. NIMS, the immediate impact on NBFCs. He believes there is no reason why Yes Bank shouldn't get an extension. It's a fairly legitimate request according to him. Okay, moving on to the next piece on Indian Open today. Indians like their alcohol. I think the world does. But the consumption in India is only growing with each passing year. What's not so encouraging, though, for liquor makers is the constant change in the tax structures. There has been recent hike in ethanol prices. Might actually have a beneficial impact on margins because they manufacture ethanol and might be beneficial for them. More and more molasses gets diverted to ethanol production, maybe just helps the liquor companies as well, at least the ones which have some capacity. So all in all, it's a heady mix for liquor makers like Globus Spirits, whose joint managing director Shekhar Swarup joins us right now on the show to talk about the recent price cut by United Spirits, the ethanol pricing and more. Thanks so much for joining in, Shekhar. Your peer United Spirits recently cut prices to bolster its market share in the country. Does this force other companies as well to cut prices in order to either maintain or gain market share, not just in Maharashtra but across the country? Your views here?
It's very difficult for me to comment about the strategy of United Spirits to get market share. But for our brands, we operate in the IMIL space as well as the IMFL space in the premium segments. And we have a certain strategy on how to get market share for our IMFL brands, which is to provide consumers a better product than they have been previously getting at those price points. And that is working well for us so far. Whereas it is early days, our brands have only recently gone into the market. We are getting distribution at the level that we expect in Karnataka, Telangana and Andhra Pradesh, as well as Pondicherry. In the case of IMIL, no, we have not needed to make any price changes. In fact, we've had price increases in Rajasthan, which were given to us by the state. Again, as you're probably aware, for IMIL, it is pretty much a single price point market across the country. In every state, the price point differs, but it is a single price point in that state. And the state decides whether to give you a price increase or not from time to time.
Okay. So, Shekhar, the simple question would be, how does this price cut affect margins or pricing for companies like you?
So, honestly, I'm not. So in every state, the strategy differs, right? So United Spirits or any other company taking a price cut in one state does not reflect on the business in other states. And the fact that they're taking a price cut in a state could be because of changes in their portfolio that they want to bring. I don't see it as reflective of demand in any state, because the states that we operate in, at least, demand is quite strong at the price points that we are occupying. And there are certain brands of United Spirits that are also, and other players that are occupying those price points. This is, probably a one-off for one or two states. It's not something which is reflective of the market. Demand is quite healthy. There are new consumers that are coming into higher price points. There is upgrading of price points that is taking place, or premiumization as we call it. I think the market is quite healthy.
So, yeah, okay. So let's talk about the market being healthy. We are halfway through this financial year. How have the first 6 months been for you?
Sure. So Q1, based on our results, has been pretty good. We had price increases in Rajasthan, and that continues. Thereafter, there has been sort of cross pressures that come into Q2, especially on the agri commodities side. The rupee not doing so well has also impacted some of our raw material purchases. So there's been some cost pressures, but by and large, business is firm, and our business is quite sort of sticky, both the IMIL business as well as the bulk business. So that's been going pretty okay.
Okay, so does this whole scenario, therefore, Shekhar, challenge the super expansion of margin phase that a lot of investors believed companies, not just you, but other companies in this space could have going ahead as well?
I don't think so. You know, the alcohol business, like you said earlier, is expected to be grow quite phenomenally, both in volume as well as value over the next decade or so. And that's sort of the reason as well that there have been a lot of M&A activities in our industry, especially international companies coming in. I believe that the market will certainly grow in double digits CAGR over the next few years. I also believe that the value will grow as well. Some companies taking price cuts now and then is not, I don't believe it's reflective of the overall trend that the alcohol industry is going to have in the next decade.
The second thing that I wanted to talk to you about is ethanol pricing. How do you view this ethanol pricing verdict, and would you be a key beneficiary of the new prices and the tenders that will be put out from October or December?
So this has a pretty substantial impact on the entire alcohol industry. The largest purchaser of alcohol, and all alcohol comes from distilleries, is the other OMCs. And they have this year, in the year starting 1st of December, which is the sugar year, they are going to be purchasing ethanol at about 20% premium compared to the previous year, especially for grain alcohol, and about 10 to 12% premium for molasses, C-heavy molasses, the traditional molasses alcohol. This will push up the price of any alcohol that anybody wants to purchase in the country, I believe, by similar amounts. For grain alcohol, about 20%, and for traditional molasses alcohol by about 10 to 12%. And as a result, the companies which are surplus in bulk alcohol, such as Globus Spirits, will probably benefit from this quite significantly. And companies that are deficit on alcohol, companies that rely on buyers for alcohol, will probably in the short term stand to sort of lose a little bit of their value to this commodity. Now, the long-term impact of this has to be seen. Of course, this is being driven by the OMCs, driven by the Ministry of Petroleum. As long as it continues to make sense for India to purchase ethanol and dope that with petrol, I believe this policy will remain the way it is today.
Is this a material impact on your EBITDA, Shekhar?
It will have a pretty significant impact on our company. Our volumes will go up to the extent that our Bihar capacity, which was currently underutilized, will become fully utilized. On the other hand, our EBITDA side, our profitability will improve significantly for the alcohol that we've been selling as bulk into the market. So about 50% of our overall capacities we sell as bulk to beverage players in India and overseas. So the value of that 50% will now stand to increase quite a bit.
Okay, but if the tenders are due from October or December to November next year, does the impact, the material impact that you spoke about, come in the current financial year, or is it only in the next financial year, that is FY19?
So the tender period is 1st December 18 to 30th November 19. It's difficult for me to say at this juncture, what period Globus Spirits will be bidding for. Globus Spirits will start bidding. The process of bidding is open currently, and based on allocations, we will then figure out when our dispatches will start, which quarter onwards our dispatches will start. But it's safe to say that FY 19-20 will see the entire impact of this policy. And I'm unclear currently as to whether the current financial year will have some impact of this policy.
Okay, we wish you all the best for FY 19 and FY 20 then. Shekhar, thanks so much for taking the time out and speaking to us today. That's Globus Spirits, not too perturbed about the price cuts that have brought in by United Spirits. Very bullish on the ethanol pricing and the offtake thereof for the industry at large and for him as well. By the way, just before we wrap it up on this leg of Indian Open, need to mark that the markets are just like holding on by the skin of the teeth, really. The Sensex just about 0.08% in the green. So it's come off quite rapidly from the highs, the opening highs. We started off about 0.7% higher. We're now just about flat in trade. Indiabulls Housing Finance is up 7.5%. So after 3 days of falling 8%, Indiabulls Housing Finance is up about 8%. So that's good news for their shareholders. Yes Bank is about 3% high as well. So that's not doing all that bad. But IT's had some pressure points today. Kotak Bank and ITC are amongst the other stable stocks that have some pressure points today. So blue chips or the poster boys are just coming off the walls right now. Shameless plug at that. Well, let's wrap it up on this leg of Indian Open then. Thanks so much for watching. Up next is the FNO Show.